Welcome to this week's episode of the Real Wealth Podcast. This week, we're going to be talking about one of the biggest business opportunities we see in the coming 5 to 10 year period. This isn't a flash in the pan type thing. This is something that is going to be a massive business opportunity. There is a huge transfer of wealth happening right now around us, and we thought it'd be really good to spend some time on it and talk about it. I'm joined by Mr. Laurie Duncan because in the office, he's sort of the specialist when it comes to this sort of stuff. So welcome. That's an LD.
Thanks for having me.
And of course, I'm talking about buying businesses, the opportunity to buy businesses, particularly from baby boomers. And this is something that's talked about a lot in the press at the moment, is we have an unprecedented rate of baby boomers now that are retiring. We have an aging population. There's a huge amount of businesses just now run by baby boomers that are looking to retire, which leads to a massive opportunity for anybody starting out to look at business acquisition. So we're going to spend a bit of time talking about business acquisition, where you can find the opportunities, what a good opportunity looks like, and we'll cover some of the numbers just to put some scale around this opportunity, because the numbers are staggering when you look at just how many people are coming to the retirement age and how many of them have significant businesses. We're not talking about necessarily mom and pop shops here. We're talking about substantial businesses. So welcome. I wanted to start, before we get into the guts of this, I wanted to start by sharing some of the statistics. So there are, starting from 2019, over 600,000 UK baby boomers hitting pension age. And that number is going to continue above the 600,000 per annum level until 2029. So for another 4 or 5 years, we're going to see significant amounts of baby boomers hit retirement age. And what does that mean for the businesses? Well, 99.9% of all businesses in the UK are SMEs, which means they're small to medium-sized businesses. They're not the massive businesses that are, on the FTSE 100. They're smaller to medium-sized businesses. A lot of them are very profitable. Of that, 99.9% of businesses that are SMEs, around about 50% of them are owned and run by baby boomers. So we're talking about 50% of 99% of the businesses out there right now are at some point going to be affected by the retirement of their owners and directors. Now, that's not to say that all of them will come up on the market. That's not to say that every baby boomer is going to look to sell. They may have a transition plan. They may be putting it down to their kids. But that is not true of everybody. And it does mean that there are an unprecedented level of businesses out there that are going to come up for sale over the next 5 to 6 years. The SMEs account for something in the region of 2.4 trillion of revenue every year. Now, we're saying of that, 50% of them are run by baby boomers that are heading for retirement age. That's 1.2 trillion of UK revenue in businesses that may be affected by this baby boomer retirement. It's a huge opportunity, and that's where I talk about this massive transfer of wealth. If these guys are exiting, someone's taking over that business, whether it's been acquired by a bigger organization that is just consolidating, or someone else has seen the opportunity, looking at management buyouts, all the various different type of strategies around this. Whatever way you swing this, money's moving, and it's moving in a big way. So I think this is a really cool topic to talk about. So let's start by talking about our experience in business acquisition, and it's been pretty sketchy, I think. So far, yeah. So in June of last year, year before, 2 years ago, we went through our first business acquisition process. The idea of it was we were going to consolidate our existing building company with a company that was already doing external kind of client work, kitchens, bathrooms. We were doing a lot of internal refurbs for buy-and-let portfolio. We wanted to start bringing in some external money into the business, so we bought a home improvements company that was operating. It was doing maybe 400 grand over a year. It was on the face of it profitable. it wasn't a great experience for us, but I think the important things that we need to take away from it, and kind of, this is a strategy that we are very keen on going forward. The mistakes that we made in our first, well, maybe you can tell us what you.
Well, we made fucking tons, didn't we? I think, like, the word I wrote down there was naivety, and I think that was a major part, a major kind of failure in our decision-making process. That business acquisition, we effectively got into business with somebody that we didn't know. And unfortunately, we found out all about that person after going through the motions of being in business with them ourselves. And I think that just proves the point that you shouldn't just get into business with anyone. Like, we're really fucking lucky, I think, the way it's worked out for us and with Connor, and like, we all get well. We're all like, we do work very well together. But that kind of came into nothing, and I think we've been quite lucky. At that time, when we were running that company with all the trades guys, and it made sense. So we thought, to bring in this revenue stream, we expanded our office. We had a showroom with windows and doors. We had a table and chairs and a screen, and so the clients could come in and get their whole immersive experience and all that. But ultimately, it didn't work out. We tried to create what, in theory, was a kind of a cool setup where the guy remained as like a sales agent, so he kept the revenue coming in for the business. But the problem with that, and the way it was structured, was that he was always getting paid his commission within 7 days of signing up a new job, whether or not the project made any revenue or not. And the whole thing just got kind of very toxic very quickly.
And I think, just to give a bit of wider context to this, so we bought this company. We structured it on the basis that we'd make a small upfront payment for the company, and there'd be a second payment further down the line based on the performance of the business. We didn't get a lot for this business, but it wasn't highly profitable. We did see the opportunity to strip back a lot of overhead and consolidate it with our existing business and create something much more profitable. For me, though, the fundamentals around the failure of that were, much further down the line. The existing business we had was not a big focus for us. The building company was a subset of what we needed for our main business, which was buy-to-let and property investment. So it was already a business that wasn't, something that we intended to create. It wasn't something that we're passionate about. It wasn't something that we're particularly interested in. It was solving a problem. And then we create the problem through that, and that this business really isn't making money. We're paying quite a lot for these refurbs versus what we pay externally. It doesn't generate any money because we're paying ourselves for this. So how can we fix that? Okay, let's buy this company, and it's external work, and hopefully there's higher margins and et cetera. But we were trying to fix a problem with this new solution. But, we didn't ask the most fundamental question, which is, why do we do this? Is it coherent with our skill set? Is this something that we really want to grow going forward, or are we just trying to fix a problem here? And that to me has been the biggest lesson. The skills that we have, the three of us, as the guys that run this business, is we are very good at structuring deals and providing services. Anything that is systems based, office based, service based, we're very good at. What we're not so inclined towards is construction work, being on the site, being out and about all the time.
Intelligence work's required.
Dealing with, individual clients for various projects. Now, it's not, we went to scale a business that we didn't have a fundamental skill set between us. And I think that was the most fundamental mistake. If we look at all our businesses and which ones we want to scale through business acquisition, it should never have been that. We were just trying to solve a shortcut problem, and it isn't by buying it.
There was no passion in it, but that's another thing I think that we made a big mistake on. We're a lot kind of better versed in business now from the experiences we've had, but starting a business is no mean feat. There's so much that goes into it: time, focus, you need to absolutely love what you're getting into. And we just never loved that business, you know. But the guys, like doing deals, as you say, but the construction side, just was.
But I think there are some really important points there, and what you mentioned there is that the pain of starting a business it is really tough. You know, it's huge, long hours trying to get something off the ground. The reality is nobody cares about your business. You know, for a very long time through this process. You know, you have to be able to deliver and achieve something before anybody's going to care. It's really hard. There's a lot of front end work, and most new start companies fail in the first year. So the idea of taking on an existing business that has track record, okay, we picked the wrong avenue to go down, but fundamentals of what we did make absolute sense. I mean, it is something that we're going to look at more in the future, but you know, with a completely different head on it. But the strategies itself, you know, I feel really bullish about it. I feel like there's still massive opportunity in these businesses because these have been built over years. They have reputations, they have brand awareness, you know, they have profitability for many of them. You know, and there are very creative ways to take those businesses on without having to take huge amounts of money.
Aye, and a lot of folk out there talk about the whole buying businesses thing, and just, you know, they say how it makes a lot more sense to take over a business rather than to start one from scratch. And you know, I really get what they're saying there, because, you know, there's this saying about the rocket ship as it's trying to exit the orbit and get out into that atmosphere. It uses 99% of its fuel just in the lift off, you know, and it's like, I get that now from a business standpoint. So it can make a lot of sense. I think we just had a bad experience in our first kind of deal like that, but we have different scenarios going now in the property world, even where we are looking to take on businesses, and, you know, we can structure them in different ways. We've definitely learned a lot, and it's as frustrating as it was. I always look at everything we do and just think, fuck, that was a great learning experience, you know, and it definitely was. We've come out of it much more, you know, much stronger, much more experienced. So I am actually looking forward to the next one. Let's just say the strategy of, like, you know, stripping out the overhead and consolidating the office locations like we did in that first deal. All that type of stuff's really cool.
I mean, I think when I look at the opportunity, and particularly the fact that these are businesses that are run by people who are older, you know, we are talking about baby boomers, and so you know, there has to be an opportunity there to come in with a fresh set of eyes, and maybe a bit more of a view on you know, the way that the world is going. And be able to get the most out of some of these businesses that maybe haven't changed much in the last few decades, as their owners have got, you know, towards retirement age. That to me has to be a fairly substantial opportunity. You know, take a business that is doing well, but be able to massively push it forward because you're coming in with the energy, fresh eyes, you know, different view on it.
That's the feedback we get from any of these guys that were speaking about doing deals and doing what we are doing. You know, these older guys always say, "Oh, I love the energy, I love the drive," and, you know, it reminds me of myself when I was your age. You know, they've just kind of done the dance, and it's time to offload. You know, but I mean, it'll be interesting to see what the next one is that we do, because there's a few maybe different types of opportunities kicking up out of those.
So let's talk about, and I think it's a really important point for people to understand that, you know, you can't buy a business without having to first be a millionaire and having all this money to plug into it. You know, when you look at fairly small companies, it might not be particularly interesting. A lot of people talk about this as a gateway drug into a business, where it's maybe quite a boring little business, but it chugs it along and maybe creates 10, 15 grand in net cash flow every month. You know, you can pick up a business like that for not a huge amount of money. But most importantly, there are very creative ways to finance the acquisition of even a much higher profitable business. You know, so let's talk a little bit about that. And then I think the first one I want to mention is that seller financing is a really interesting way.
Absolutely,
to do this. And effectively, by what we mean is, you know, you are essentially taking a loan to buy the seller's company. You're taking a loan from the seller to buy it. But it might be the fact that they have built up a substantial amount of cash And we were looking at a situation like this just now where we've built up a substantial amount of cash in the business account. But for them to take that out as dividends, they're going to have to pay close to 40% if they do it all in 1 year. So massive tax hit. Versus if they sell the business, then entrepreneurs relief kicks in, and it's a much, much lower level of tax, 10 to 20%, depending on what they're selling. So, they have the ability to access their cash and pay a lot less tax. So there's ways to use that money that's in the company to deal with the acquisition process. Maybe it's a certain amount of money from that up front, as long as it doesn't leave the company without the necessary working capital that it needs. So the investing into big lump sum, albeit funded from his own bank account, saving a lot of tax. And then the rest of the payment comes through cash flow from the business. So, he might be making a couple $100,000 a year in that business, and $100,000 of that is going out to the previous owner for a period of time until they pay. And so that could be a really clear way. And you put very little of your own money, if anything, into that deal. It's essentially sweat equity. You take over that business, you're going to sacrifice profitability short term to have the asset going forward, and you always have the opportunity to grow the profitability as well. And when we talk about acquisition prices of businesses, you're talking about usually a multiplier of profitability. So depending on the industry, that could be anything from 4 times multiplier to 10 times multiplier. So it's making a couple $100,000 profit a year. You could be looking at an $800,000 valuation, or you could be looking at much, much more. Very industry specific, but the important point is that there are ways to finance this without them now.
And funding can be complex for buying businesses. There's loads of different ways you can bring money into your business, but it can be complex. If there's a vendor in that situation where they are cash rich, it can be a fucking great way to fund deal. Especially and they're probably not too asked. They probably don't need it all right now as well. So you can find that they're quite flexible with agreeing terms and that.
There's also the leverage buyout option, which is essentially taking debt against the company assets to buy the owner out. We've seen a few examples of this recently, and you'd be amazed at the amount of debt that a company can take on as ever the company's been profitable for a long time. The assets, the security. And you can see some really great leverage of finance there. And it's just a case of, can I factor in the cost of this debt to pay the previous owner into my cash flow? Exactly. And how much of an impact is that going to be? But if you get buyout that, it could be quite low percentages. We're not necessarily talking about debt that's 15-20% APR.
But that even the way that can get traded, we talk about some of our clients that are building portfolios are using their trading businesses to access cash. But in the exact same fashion as what you're talking about there. But then they're putting that money into their property business to grow their portfolio. And that whole world of kind of trading company finance, the way that these funders look at your business to dictate what value they're going to loan to you, how all that works is really interesting. I think so whether you're using it for a leveraged buyout or you're loaning it in the property business, if you have a trading business, it's a great way to access decent sums of cash.
Well, and this is what I was going to say, in terms of financing these types of acquisitions, a lot of it isn't that different to what we do in corporate. That there are options of bank debt, depending on the position of the company. You can obviously look at personal circumstances and say, okay, can I remortgage against my house to put some front-end cash in? You can look at lending and doing maybe a joint venture partnership where if someone's got the money, you're going to put in the sweat equity. They pony up the money for the down payment on the business, and we're going to go in there and run it, and you take 50% each. The ownership. So there's all those types of creative opportunities are there. And also, if you're working in a company, as a small, medium-sized company just now, and you've got a director that is of an age and looking at retirement and doesn't have that succession plan, management buyouts are a great option. we've got a client just now, who done an incredible management buy-in and has, through the process of the last 8 years, made himself a multi-millionaire through that deal. And again, it's like there are creative ways. You don't have to go in day one or hand over millions of pounds to manage it.
We've got another client as well who's doing 20 mil a year now, and that was a management buyout. He took it on himself from the previous owners, and a very similar type of setup. But that was a guy who I think just worked in the same company for 10, 20 years, whatever it was, and purely because that kind of older generation was moving on, he managed to sweep in and take over the company.
And this is a really important point that I think people need to realise about entrepreneurs. There are a lot of entrepreneurs whose strategy with start a business is to exit the seller. There are a lot of entrepreneurs who have just had the business their entire life, out at that level. Maybe it's kind of plateaued and just chugged along for a while. But even if your business is very profitable, you're unlikely to be seeing big sums of money annually as an entrepreneur. Because as entrepreneurs, we understand tax system. Nobody wants to take a big salary out of the business because you're going to give most of that to the tax money. Nobody wants to take big dividends past a certain point because you're going to give the majority of that money to the tax money. We always advise, if you stick to this 60 grand a year for various different things and you pay a minimum amount of tax, you start plumbing that up to 70, 80, 90, 100 grand or 200 grand, then most of that money could be going to the tax. So as entrepreneurs, we don't like to take huge sums of money out of our business every year, which means that a lot of these guys get into retirement might never have seen those big sums of money. They might have a very profitable business that's made a lot of money every year and probably got a lot of money in the bank because, they've not wanted to dividend it out and say, so much you can do creatively with that. And these investors, it might be the case that there's 800 grand, buyout, which is going to see them very comfortable through their retirement. And if you can find a creative way to structure that without having to pay 800 grand out there, it's going to be really attractive. But definitely the whole kind of I think it's quite similar to the property stuff that we talk about, using other people's money. Effectively, you're just using the vendor's money in this scenario if you're using their cash or even the funding for the business to acquire the business. We talk about working with private investors and then they can fund your whole deal or more than the value of the deal, and it's a very similar thing. But you definitely don't need. It's like that. I remember the very first time I ever heard that about you don't need any money to get started in property. And I was like, what? Don't believe you. It doesn't make sense, blah, blah, blah. And as you go through the motions, it's fucking very doable. We do it all the time. And it's very like that with the businesses as well. You definitely don't need big sums of cash to go and acquire a business. And a lot of people maybe struggle with that, but maybe just never been exposed to the strategy. What do you think are the kind of most important steps in looking to acquire?
Well, I always spend a lot of time kind of going through. We use Credit Safe, for analysing businesses, looking at all the financials. I use that on a daily basis, every day, first thing in the morning, get an email through to Credit Safe saying, here's all these updates from these companies. And I love just going in and just keeping an eye on certain things, seeing how they're performing year on year. Analysing the numbers for me is always kind of the most interesting part. And we are obviously very fortunate to have Mr. Alex Robertson, qualifiedaccountant.com, here in Real Property, because you understand that on a level I've never seen before.
And it's not to say that everybody needs to understand it to that level, but there is a level.
I don't, but
you have financial literacy, a level to a level that is sufficient for this type of thing. But that's important. I would say that's one thing that for business acquisition, you need to be able to.
Yes, 100%.
It's okay to say, right, I'll bring them account and have a look at it. But you need to understand the business related to the numbers. There's so many different variables looking at a set of accounts, and actually that's the main thing we get taught through SEMA and being a sharp management accountant. It's to be able to pull apart a set of accounts based on a basic understanding of the company, how it operates, and how that then leads to the key numbers with that financial statements. It's understanding things like, if it's a company that has stock, how quickly is it turned over as stock? Is done a lot of stock, I've got a lot of dead stock that you're gonna have to write off at some point.
Yeah.
The more stock it has to hold, the more working capital you need as a business, which means you've got all this money tied up in this business that is not out there creating more money. So there's important things like that, being able to pull apart the overheads and understand, right, it's exactly what are they doing, who's adding to the bottom line, who's taking away from it. Is my existing operation, I can have one able to consume some of those roles and I get more out of the whole. That's the whole synergy, 1 + 1 equals 3 thing, where you can kind of get the benefit of it, understanding what debt I've got, what the terms on the debt is, there any debt that should expire sooner or later because of the whole.
Because that's what you're signing up to when you take over a business, Mark. You're signing up to all the existing liabilities that you've not decided to take out. You're signing up to all the staff, all these people that you don't know, all these attitudes and personalities,
Yeah, if you think you're going to go in day one and was just a staff, well, how long have they been there? What is there going to be big redundancy payments? The exact line around.
Yeah.
It's not to say that's what business acquisition is about, but these are things that you need to, have an understanding of. Also assets, how often the assets need to be renewed, are they aging, insurances, a lot of insurances, perhaps loads of businesses there that are double or it really seems to be a control. One thing we found, and that even with all the kind of due diligence, and that is one of the key ultra hearts of the process, is to get into all the detail on our financials. And business in general. There's a lot of businesses in the construction industry that are not accounting properly the revenue. So, they get a deposit against a big project and they're booking it revenue. That's not revenue. We're not done any work, they're at an advance payment. It's not always the case that these small businesses are accounted for properly because they use small local accountants that maybe don't understand the business to the same degree. And as a pound fund might. They're not audited unless they're over a certain level. So you've not got a proper firm of accountants go down there and reviewing the accounts to make sure that they're accounted for correctly. If people are booking at revenue and advance, the numbers can look really nice, but you get in there and find you've got all this liability because you've booked revenue and you've not done what. These are things, and actually that's the part of this whole process that I love, is going in and looking at the existing business, seeing them they do things, pulling it apart, trying to figure out why do they do that, what's that, and what's this number here, and what's driving. Do you look at any particular types of businesses like on a regular basis or below me? I think the key for me, and I think the biggest lesson learned from us to our failures is understanding where your skill set is and going down that route of, okay, these are the types of businesses we're looking at, because that is where their skill set and lacks. And so, I think I am kind of quite focused on the sort of businesses that I'm interested in, and it is more stuff in the service sector and things, and that's where our skills lie. But, we've got, it's finding that right fit based on your skill set, your own individual skill set. And then the question that always comes next is, well, where do I find these businesses?
And that's what I said. And that's it. And you might like I do, I keep an eye on certain companies, and you can do this on Companies House as well as, correct say, by the way, you might prefer like looking at the Companies House kind of style of document, whereas I much prefer the credit safe version. But I mean, but you can get details on these companies from these types of documents. There's another service we use and we've been using for a while now called Endo, where you can go in and you can filter by the size of the company, the number of employees, the number of directors.
What type of in?
Oh man, it's fucking incredible.
And what you went to straight away there is a really important distinction. This is just how we operate. You think about it as a thing, but you went straight to direct to vendor.
100%.
Rather than broker. Like anything, you can go to all these brokers, you can go to all these online websites, Dalton Business, Christie & Co, Biz for Sale, fuck it, hundreds of that. And there are businesses there that are for sale. But as soon as the broker's involved, usually they'll be pushing the price too high.
Well, a lot of times they're not a fucking clue either. It's like,
They will restrict your ability to create or use creative financial solutions to buy the business to the seller's detriment, and because there might be a deal to be done.
exactly.
But they don't even get the chance to discuss it because there's an agent in the way that is only interested in a big lump sum payment for this business that their commissions.
Exactly. It's just the brokers generally, like, whether
It doesn't matter whether it's property or it's the same. The quicker you can get direct to vendor on any deal in any
Definitely.
the better that opportunity is going to be for everybody involved.
But I mean, how do you find that in New York? So you can use the likes of
It is always a big one, and it really is incredible because you can go to company's house and the information there. There's no way to search it. It's the ability to get it.
And even Rizo's had success with that, and basically creating written letters and put them in envelopes and posted the letters to the director's office to try and get content with them, and it works. Folk open the letters, and if they're interested, then
There's usually a very big deal going on at the moment with us that came from that product.
so exactly.
It's where the fundamentals of having their property. Applying the same thing
Exactly.
in terms of how to finance it creatively, and in terms of how to get direct to vendor.
How to find them, how to fund them, and how to get the deal over the line, right? Because I think because of the nature of what we do, there is always an endless amount of problems, with these, whether it's the vendors or the buyers or the completion process. Having a bit or like quite a vast experience really with dealing with different people in different situations.
Yep.
You need to be like open-minded to whatever the fuck is going to come your way, because the problems just don't stop, and you need to be willing to tackle them as well. Like Christ have had a fair share of all them. And it's the same every deal, and it's not any different whether it's a property deal or a business deal.
Yeah.
Right.
So, we spoke briefly there about various different methods of kind of getting direct to vendors. There's obviously online marketplaces as well. Yes, albeit brokers are involved. I don't think those opportunities are going to be as good.
Yeah.
You've got networking, personal communication. You've got this wonderful business now like LinkedIn and all of that online.
Yeah.
Where opportunities can be. People forget things like country as well. You'd say, who in their right mind would think about selling a business? The people who sell the properties of thing.
I know. I had to do that.
So, it's always getting to these places where other people aren't necessarily thinking about.
Yeah.
There can also be kind of local chambers of commerce and all that are trying to support people out of retirement. So they'll put stuff out there. Industry events, trade show, you've got these trade publications that would also show, again, very industry specific. That is industry and looking at this is a skill set I've got. Let's get magazines, and they would be supporting people with selling a business in that industry.
Yeah.
So there's a whole wealth of that, and I'd almost say with business it's even easier to get direct to vendor versus property, because property, you've really got Scotland and the registered title to get the individual's details. There's a wealth of knowledge on who owns companies, who the directors are, what their addresses are, who's their accountant, and it's much easier to get to the people that own the business.
Yeah.
Unless they're registered with Cayman Islands or village shit.
But we registered there.
Not yet. That's veteran progress.
The networking one's an interesting one as well, because the more folk that and we make a kind of conscious effort now for me to get out and about and do a bit more of these kind of networking things with other business leaders and being known for kind of just being active and all that kind of thing, I think is really beneficial too, because you find that like opportunities just kind of naturally come your way, just through conversations of other business owners that have also got their finger on the pulse. And so let's say every day somebody's looking to buy something, but if you hear about an opportunity, you hunt it down. That can be a great way to do deals as well.
So we've kind of covered, business acquisition in terms of what you should be looking for, and for me that is all about your skill sets. Needs to be conducive. We spoke about how to find deals. We've spoke about how you can potentially use different financial strategies to buy the deals. Let's talk about the due diligence process and so that, and you're going to have to go through there.
It's fucking complex, man. There's a lot of different things you need to check out, especially if, like, the people is a big deal for me. Who are they? How has it been run? What we that was a big failure on our part. We never even like asked around about who we were about to get into business with.
Yeah.
For me, that was fucking crazy. And I think I made that point earlier. It's like after we acquired, we got to then know the person, got to learn about them. There's a lot of people coming out the woodwork being like, what the fuck are you doing getting into business with that guy? For us not to have researched the person, there's still every situation like, you're going to get in, you're going to acquire a business and the person would stay involved.
And in fact, that's probably something to avoid in general. Although there has to be a transition plan in place.
Yeah, man. But that was a big fucking mistake, We should have done our due diligence on that. I mean, acquiring an operational business, if you remember back to all that bank analysis that was done and all their debtor books and, the orders and the position of the order at the point of takeover. And I mean, man, the due diligence process is complex and endless, I would say.
Well, it's also constantly the target, because as soon as you exact that set of transactions, there's a whole new set of transactions, and if you're not with them very quick, and that's why these types of transactions can just be, right, we're sitting around the table, we'll run through everything now. Yeah. And we'll work to whatever we need to work to get a deal done.
Yeah.
Yeah. Because it's just such a moving target.
Yeah.
And if you're not getting through it quickly enough, there can be a whole new raft of stuff to look at before you even finish the first. So you've got all the financials and invoices and understanding, as you say, debtor book, creditor book. Yeah. You want to understand any sort of legal aspects of it. Is there any ongoing cases with, unfair dismissal or
liability,
client,
VAT, or getting HMRC liabilities?
That's all really important. Are all the taxes up to date? Yeah. When's the next tax due? Is there a set aside fund to deal with those taxes, or is that going to be a cash flow issue on acquisition?
Yep.
What is my staff dynamic? How long have they been here? What age are they? And all that staff aging as well. You're going to have to replace all the staff.
Are they any good? What's the turnover of staff like? What's the level of experience? Man, it's...
There's so many levels to a business. Due diligence can really be a huge exercise. And I guess the first challenge for a lot of people getting into this is, I'm not qualified enough to be able to do that due diligence effectively. For me, that comes back to picking the right business and having an understanding of that business will make it much easier for you to be able to do due diligence. Yeah. If you know the nuts and bolts of how that industry is run, you can ask the right questions. And then, albeit you might still need some support on the financial and legal side.
Yeah.
Any sort of red flags you can think about in terms of companies' due diligence? Anything that is immediately, fuck, we need to sit back and have a think about this?
Well, I don't know. I don't think so. I would say that, like, it's always worth exploring. Like, I'm never sure if, like, a deal's not a deal until we've kind of analysed it.
Yeah.
And something like could appear a red flag, but then after you go in and you suss it out and whatever you get, if there's logic, if there's reason around it, then maybe it's something you can work through,
Again, the red flag doesn't necessarily have to be a deal breaker. It can just be something a bit more specific review.
Yeah.
But for me, it's things like if you've got high profitability and low cash reserves, that would be right. Okay, as the owner's just been fleecing this business, or is there a more fundamental reason why there's no cash in the business? Because working capital has grown by 100% over the last year, which is just stock inefficiency. Or there could be a much more fundamental issue there.
You get a lot of these brokers back to them again because the amount of times we've seen these businesses where they say the business is worth whatever, but then they don't factor in the fact that, you know, there's two folk taking their earnings out and they're the ones that sell the business.
That's the number one.
You need to fucking, you need to come in, of course you need to replace that income, you know, so actually it's not worth what the fuck they said it was worth in the first place.
That done in my head.
And so many of them always come across like that. And you can understand, like, if you're like, if that's your kind of plan to come in and take over that business and be the guy in the business that's running it, then fair enough. But like, why the fuck would you pay like top price for that?
You know, we've
extent.
looked at quite a lot of agents.
I mean,
on the belly up. And that is the number one fucking issue. You know, they'll say, oh, the lead agency's making 50 grand a year of profit.
Yeah.
So at a 4 or 5 times multiplier, I'm going 250 grand for my business.
Yeah.
And it's like, hold on a minute.
yeah,
You're the director. Why are the salary so low? Well, I don't take a salary, I take dividends.
Yeah.
It's like, well, I'm not going to run this business, so I'm going to have to hire someone to come in
exactly.
and do your job. Yeah. That's going to cost me 40 grand a year. So actually, you're not making 50 grand a year. Hey, making fuck all. So your business that was worth 200 grand is now worth about 40.
Yeah.
Max.
Yeah. Yeah. It's a strange position in that one for me, but you can, like, you know, there must be people out there that are buying these businesses at that type of multiplier. And it just doesn't make any sense to me. But there must be, because of the amount that you see with their opposition like that.
Yeah. You know, it's fucking crazy. That's a really good one. It's the one that comes up.
Aye, could you think in the face of it again? It's like, is that right for it? Well, I don't know. You start looking in it, and the more you unravel, the kind of crazier the scenario is, you know. But so many opportunities are like that.
The other red flags in terms of finance will be dependent on the industry. You know, if you have an industry that doesn't require a lot of capital, like it doesn't require a lot of fixed assets, like it doesn't need a lot of vans or, you know, big computers or, you know, anything that might be a tangible fixed asset, but it has a lot of debt. You know, that's usually not a good sign. But, you know, especially when you start to get to these lenders like, you know, your funding circles, your kind of higher percentage lenders. Yeah. You know, that says to me that the business has probably went through some cash flow issues at some point. If taking on that debt, it might be at a higher interest rate, so it's affecting the profitability of the business. Yeah. Why is it not paid it back? Yeah. And, you know, has that amount grown over time? You know, is there a fundamental cash flow issue with the business?
Yeah. Yeah.
So, yeah, few red flags there. Any negotiation tips if you're sitting down with the vendor to discuss buy the business?
I always like to let them talk more, and I just listen, because they kind of just tell you loads of stuff that they probably wouldn't have or didn't want to tell you. But if you're just going to sit there and they're saying they're just going to stare and you're like, then they just keep talking, like, fill the void. You know, that's the Russian strategy. And the Russians always say when that goes with the Americans, they just let them talk. Yeah, say nothing. And so till it's so fucking awkward, the Americans have no choice to add up and give away their car. I mean, I think it's kind of different about a business scenario, because I don't know if you're going in to have a discussion with anyone without some type of expectation on, like, what the deal size is going to be, with the value of the transaction is going to be, something like that. But I always remember with property one, when I was a wannabe property sourcer, it was always asking them, like, what is it you need? They would say, like, you know, okay, Laurie, so what price can you pay for my property? I'd say, well, what price is it that you need? And every fucking time I was ready to go in with like 100 grand, and they'd say like 50. Like, sure, I can do 50, no problem. You know, that tactic has proven very powerful for us. Don't be the first to make an offer. Exactly. But just asking questions. It's like, even if they ask you a question, and I'm actually really guilty of this now, because it's like ingrained in my personality. So even if, like, Emma asks me, like, you know, what do you want for dinner? And I'm like, oh, what do you want for dinner? And it automatically happens, like, you know, but it is just the way, I guess, I've been trained now. But it is very effective, and you usually get a much kind of lower price point through like that. But as I say, for businesses, don't know how kind of valuable that would be. But
I think it comes back to, for me, and it's the same with directed in on the property, and understanding what important.
Definitely, yeah.
What are the key things that matter in selling the business? And if they've spent the majority of their adult life building this business. There's going to be things that are important to
Yeah.
listen to.
Yeah.
And they might want us to make sure that we GA in the office, our job.
Look, that, I know, I know. But as I say, like whether it's like an off-market property deal, or it's or a property deal or a business deal, you know, understanding the situation is fundamental. Fundamental. We get so many good deals in the property side because we understand the seller's situation and we can provide a solution to allow them to move on effectively, you know, and it's not any different with the business stuff.
So, you know, you've been through the process of identifying businesses, you've been through the due diligence process, negotiate the deal. What does closing a deal look like? And I think this is there's a big misconception about how complicated this part of the deal is, because it can be incredibly simple or it can be incredibly complicated, depending on business, the deal, the structure.
Yeah, no. Yeah, I mean, certainly that first time we closed our deal, fucking hell. I mean, the guy came in the office, we signed the document, made the money transfer, and the deal was done.
Yeah, the document in this instance was like a one-pager head of terms.
Yep.
This is what I fundamentally agreeing to.
Literally just a minute of agreement. We're going to do that. We're going to do this. You're going to do that. That's the nature of the deal. Share transfer forms, bank transfer, and so that was a very simple.
And
no lawyer,
that is the important part.
Yeah,
and there is a share transfer form that needs to be signed as well.
Yeah,
and there was some documents to sign to transfer the bank. That's right. You can company and put that in our control.
Yeah,
but it was basically two documents that fund the medical deal document. Yes, like a one-pager heads of terms. If you'd involved a lawyer in that process, it could have been incredibly complicated.
And it probably could have. And yet, lawyer involvement in that deal would have been like unnecessary. It would have got very lengthy, would have got very costly, because it's not just like our side that would have then had a lawyer. Chances are the seller side have also had a lawyer. And you look at, you know, the big deal we're just doing, the outpriced all the lawyers involved in all that communication. Everybody's kind of looking after the client. But in the middle, there's a business deal to be done. So fucking hell, guys, you know, this is actually what we're trying to achieve, and every one of you is like going against that, you know. So you don't have to have a lawyer involved. I mean, obviously, the more the larger the deal, the more complex the deal get. Sure.
And I think one of the things to note is that deal didn't involve any lending either. So, you know, if lenders had been involved in that transaction, you know, then
the documentation requirements would be much more extreme.
So again, it just depends on the complexity of the business that you're buying.
Yeah, but the point is it can be very simple.
Yeah.
It can just be as simple as a stock transfer form and a bank transfer. You know, depending on what's involved, you know. But yeah, the bigger deals, the more complex transactions, definitely, there's a lot more involved, and you would want, you know, that level of complexity for the larger transactions, definitely, you know, because to try and do a monster deal like on a single bit of paper, very different from doing a smaller deal.
It all depends on how much money front end cash you put in as well. I mean, you don't want to be putting down and not being quite in there. You know, only have a piece of paper behind.
Exactly.
So there are, but like anything, it depends on the business, the scale of it, the specifics on it. But I guess the main point from that is it doesn't have to be complicated. It can be a simple minute of agreement and transfer of shares.
Yeah.
The other thing that I think is worth mentioning is, you know, we're talking about businesses and business acquisition, and we're drawing the lines to the sort of stuff that we do in property. And the reality is, for a lot of the kind of portfolio acquisitions we've done, and I'm especially thinking about one that we're just completed on. The fundamentals are we are buying a business from someone who is 70 years old plus. The banks don't want to keep lending into him because of his age. Kids aren't involved and they're not interested in being involved in the business. The business just so happens to be 100 residential properties. You know, it's no different, the fundamentals of it.
Yeah.
Now, you can buy the business, warts and all,
Yeah.
but then you've got lender complexities.
Yeah.
Or you can buy the properties through a business transaction. The result for buy-to-let is the same. The taxes change slightly and the structure changes a little bit.
Yeah.
However, fundamental is this guy's built up a business of X amount of properties over the last however long. It creates this amount of rent. There's this financing. This is a profitability. We're buying the properties, but it's still the entirety of this business.
Yeah. Yeah. On that occasion, like we elected to go for buy the properties. There was 3 separate companies actually from that vendor, and there was like kind of staffing issues and stuff like that. Like we didn't want to take on. Yeah. That was our analysis. That was our decision on that deal. But there is another deal that we're working on just now where it actually makes more sense for us to acquire the business rather than the properties. And again, that deal has been analysed on its own merits. It just makes sense, not just for us, but also for the vendor.
And all that, I mean,
I know.
Back to this whole final, pay corporation tax and then dividend tax to take all the money out if you sell the properties versus selling the shares of the company and getting entrepreneurs.
But I tell you what, that also, is a great position for us to be in, sitting in front of that guy, having that conversation. Yeah. There's not a lot of people that would be clued up enough to even make those suggestions to help him. And all it does is like bolster our credibility to get the deal done,
we just have more opportunity within our armory to come up with a solution that is better for everybody.
Exactly.
Because we understand more. And that's what ultimately financial literacy buys you more options. It buys you more creative solutions when you understand how the tax system works. The financial system works, what the lenders will do, what they won't do. That knowledge can be really valuable in the inner sphere. Definitely. So, I think the main point and the reason why I wanted to spend a bit of time on this presentation, on this podcast, particularly on this subject, is just it's a huge opportunity, massive, and it's an opportunity that you can create without having to have huge amounts of money. I can sit here and talk about crypto or watches or whiskey investments, but all of those require an input of cash to buy something that may or may not go up in value further down the line. This, very much like property investment, you have the opportunity to create something that creates generational wealth without having to put serious money into it. There are so many creative finance ways to buy business. Yeah. And now is an unrivaled opportunity when you think about 1.2 trillion worth of revenue.
It's a lot of fucking revenue, man.
In the UK is under control of all these guys and girls that are hitting retirement age then. And are going to want to exit business. Some of them has succession plans and their family are being involved or they're selling the business on. A lot of them won't know what to do. They probably don't even realize the value that they have in their own business. I was speaking to someone the other week that had over 3 million of profit last year in their business, and they're just shutting it down. They're retiring, they're just shutting it down. And when I questioned them, why are you not looking to systemize this business and sell? Because the fundamentals of the industry he's in, which is renewable facilities, it's just going to go from strength to strength. I mean, spending the time to systemize it, train the people, create this business, sell it on, then get the multipliers. He's like, just kind of happy that he made his money, and he doesn't think anybody else can do what he does. So, he shut that out. And that's just such a huge amount of value.
That's an interesting perspective.
Going at
Yeah. I think a lot of this stuff, as always, we go on and on and on about mindset. And it's like even having the mindset of like believing it's possible to buy a business with no money in a very simple fashion. Like, you either believe that or you don't. And if you believe it, then you'll go after it. If you don't, then you're never even going to make an inquiry. It's exactly the same with buying properties with no money and all this kind of stuff. So a lot of it comes down to mindset. But kudos to the guys that have got that mindset and they've got to go out and go after it. Because as you say, opportunities there to be had.
And a lot of the time it can be, convincing the vendor that there's a massive opportunity, because they may not see it, they just see it as a lifestyle business that'll get them to retirement and then they'll shut it down. And if you can be the guy that comes in and say, teach me everything you've got.
Yep.
Don't pay me. Teach me everything you've got, but I want this business. Afterwards, I'm going to pay you X amount, I'm going to structure it this way. Again, there's just so many creative ways you can do it once you first identify the opportunity.
Yep.
So, I think that's it for me this week. Anything you want to add, Mr. Duncan?
I just think that's been quite a cool episode. That like I never know the notes or whatever before we start talking and stuff. It's just really interesting all the different directions that it went in. It would be really cool to hear from other folk, I think, on this podcast, probably for other guys that are listening to the podcast, of other guys that have had these types of experience and creating wealth through business acquisition. I think it's a really cool topic, and I'm really excited to see where we take this next, because I do feel that we've got such a kind of great experience now, and we're definitely ready for the next deal, whatever that might be. So,
I mean, there's two things that I am incredibly bullish about. One is buying property in Aberdeen.
Yeah,
I spoke about it.
absolutely.
Boredom, everybody, I just think it's the place to be buying. I think the opportunities are incredible.
I agree, Mike.
With what I see in there, and obviously we've been buying for that.
Yeah,
fucking hope. But secondly is this opportunity here. With so many businesses, so much transfer of wealth, trillions of pounds worth of revenue, and these businesses are going to be changing hands one way or another over the next 5 to 6 years. Why not? Once I hit them out, and I just love when you can get in and create massive generational wealth without having to put any serious money into it, just by being creative, knowing the system, being financially literate.
Creativity, man, that's what it's all about. Creativity. What can you create?
Thanks for listening, Laurie Duncan.
Thanks for having me, bro.
This has been the Real Wealth Podcast. I'm Alex Robertson, and thanks for joining us on the wealth journey.